Okay, hey, good morning, everybody. It is Monday, the 24th of September, 2018. This is your daily Forex trading strategy session brought to you by Forex.Today. It is Monday. All right, sorry about the double audio. Got that figured out. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Very nice to see you again this morning. Thank you for the loyalty and respect that you show me every day. I really do appreciate that. That being said, if you're new to the webinars, three things. Visit TradersWay.com right now. Open up a demo account. I'm going to teach you lots of good things that you should test out. Second of all, you should subscribe down here, because every time I click the Start Webinar button, you'll be notified, and if you want to join, you just click a button, brings you right directly to the live webinar and stuff. And third, ask questions in the chat. Okay. But anyways, my name is Wayne McDonald. I've been trading currencies for a very long time. Been doing these webinars for about 15 years. So please get involved, ask questions. We can cover technicals, fundamentals. I think today we're going to cover the calendar for the week, but I remember last week someone wanted me to cover the Commitment to Traders report. Sure, that sounds good. So yen pairs, dollar pairs, gold, oil, calendar, and Commitment to Traders report. Does that sound about right? Cool. Hang on. Where's my, I'm open the other chat. Where's the other chat? It's just easier for me to see. Guess it's here. Cool. So yes, good morning. In fact, maybe we should just start there. Let me pull up the Forex.Today. So, let's go with the calendar first. Ciao. By the way, congratulations to the swing traders in the swing trading group. 2 people got more than 500 pips for the week. I think 3 people got more than 300. A couple of people got more than 200 for the week. That ain't bad. It's a good week. It's a good start. But congratulations to them. All right. Okay, let's just change this. Let's get out of that. I mean, the big thing obviously is FOMC. Excuse me. Me. Big thing is FOMC, interest rate decision, Kiwi interest rate decision. Some GDP on Thursday. Okay, and the interesting thing is, like, PCE is part of GDP, so, you know, all that kind of stuff. But pretty quiet up until then, right? So we got Draghi speaking, Bank of Japan, meeting minutes, all of that's really good. Kuroda speaking, great. But everything's going to be overshadowed by Wednesday, right? I believe the market expects the Fed to raise interest rates. I believe the market expects the RBNZ not to raise interest rates. So I think we're going to, what, 2.25. New Zealand's going to stay at 1.75. And then GDP is just really good economic data. And then, of course, European CPI. Hey, you know what? Maybe they have some inflation now, right? Who knows? So, an important week, quiet week up until Wednesday. Thursday's okay. And, you know, so good. That's actually a pretty good week because, you know, sort of the market gets out of its own way. Get out of your own way. See if I can zoom in on this a little bit. Will that make it easier? Make it easy on you now. Got someone to blame. All right, well, we'll just leave it at that. Okay, so the first thing you want to do is check the key. Light gray is long positions, right? This sort of bluish one is short positions. Black is the net, darker blue is the closing price. So darker blue, that's just the price of the Euro USD. Okay? And I got it zoomed so it doesn't show a price over there. Let's adjust that. Oh. In this resolution, it's not showing price. Should be showing price over here. It doesn't really matter. You should know the price of the euro dollar. Over here, number of contracts. Down here is the date. Did I just bomb my browser out? I think I did. No? All right. Well, anyways, let's go back. Whoa. Where'd you go? Okay, let's try this again. All right, browser problems. All right. So anyways, you should know the price of the Euro USD. Hang on, my YouTube page is lagging. All right, I think we're good. Wow, I think I'm having a Chrome problem. Hopefully you guys can see me. I'm not sure if you can. Yeah, okay. Wow. Google Chrome. Anyways, let's move on. .com. So the first thing you want to look at are what the blue lines are doing. So let me zoom in. Let me change the view so it's just a little bit easier for us to see. And then kind of zoom in on that a little bit. Okay, you can see not a lot has happened. We have less bulls in the market than a few weeks ago. Right? And then we have less bulls, we have less bears. And the net result here is looks like there's just slightly less bears. Not a big change. So what this is, if you look to the left, you see these funny little numbers. So follow the light blue line. Okay, light blue line is the number of short contracts. These are actual contracts in the United States in the futures market. Okay, back here in October a year ago, there were this many contracts short, right? And now there's more, significantly more. We're way up here. There's almost twice as many people short the euro this year than last year. Okay. Now, that doesn't tell you the full story because there's also people long euro. And so that matters, right? And that's indicated by this gray line. So the gray line, So a year ago, there was about the same number of people long as a year ago. So fast forward, there's just as many, roughly speaking, there's just as many people long euro this year than last year, but double the amount of short. Oh, sorry. That's where the price went. Aha. Good. Thanks for catching that, David. I appreciate that. Okay. So you can see not a lot has changed since about the beginning of August. Not a lot has changed net-wise, because what you're looking at is the change in traders long versus the change in traders short. And that's what really matters, right? Okay. And then I think it's interesting relative to last year, there's twice as many people short, but nothing's changed on the bullish side. I mean, obviously that's going to be important, right? So there was a time, for example, euro dollar was going up, and up, but I proved to people using the Commitment of Traders report that nobody was buying euro. They were unwinding their dollar positions, and you could see it in the Commitment of Traders report because nobody was buying it. There was no change. There might have even been a drop in the number of futures contracts long the euro, but the euro dollar was going up. And it was really important information because you know at some point when it stops going up, it's going to come down hard because there are no actual bulls. So sometimes this could be really interesting information. Right now, you can see maybe the market is a little bit dangerous because there's the same amount of bulls and the same amount of bears in the marketplace. Does that sound like a situation where you will have an unfair advantage? Remember, that's what we want to do, right? Think of the military analogy where you're walking through the jungle. And really what your job is to find a place where the enemy walks by a lot. Then you want to get there first. You want to set up some booby traps, set up some crossfire positions, take the higher ground, sit your butt down and wait. And if the enemy happens to come by, you will have an unfair advantage. Right? What you don't want to do is meet at a scheduled time in a scheduled place and everybody shows up and, you know, everyone has a fair advantage, right? No, you don't want that. So in this case, you can see the bulls and bears. I don't know if they're bored or if they're have super conviction or whatever, but there's the same number of bulls, there's the same number of bears. Which team do you join? Either way, you're not going to have an advantage, right? Your tour. I did explain what each line means. I'll do it again quickly. I guess some people came in late. Okay. This gray line up here is the number of futures contracts in the United States that are long the euro. Okay. This is reported to the CFTC, the Commodities Futures Trading Commission. You can consider these professional investors. Okay. The light blue, right, and you can just kind of see it here. The light blue is the number of future contracts short euro. Sexy Crabber says, so can we consider COT as a leading indicator? Absolutely not. This is fresh data, which was released Friday afternoon, which was actually compiled Tuesday of last week. Absolutely not. But you can perhaps use it, Sexy Crabber, and say, you know, like, for example, what if the entire market was long, nobody was short? But all of a sudden, after just weeks of this strong rally, you can start to see the beginning of unwinding of bullish trades. Maybe nobody is actually selling, so bearish, short positions maybe don't move at all, but some of the bulls are starting to come up. And that would show the bullish drop. And then what if you noticed a week later, the bears notice the bulls are getting out, and all of a sudden there's a big spike in those that are actually now shorting these contracts. Well, it's really helpful to know that bulls are getting out and bears are jumping in. That could be the top of the market, and you should take advantage of that. Is that a leading indicator though? No, but it is an indicator. So you just, what kind of indicator is it? Well, if you are a large firm trading the futures market, you're required to report your positions at the end of the week. Okay? So you have commercial traders like RJ Nabisco, for example, that one of the products they make is breakfast cereal. They might need a lot of wheat and they might need a lot of corn. Now, they're worried about corn prices and wheat prices going up, because if corn and wheat prices went up 50%, they would have to charge 50% more money for their cereal. But you don't find that here on the shelves, where suddenly like, oh man, this cereal used to be $5, now it's $7.50. You don't see that. So what they do, right? Hi, Shezzy. What they do is they hedge. So they can buy these futures contracts to say, okay, if the price of wheat and corn goes up 50%, they'll make money to offset the losses they would have had if they, otherwise, and therefore they can continue charging the same price for the cereal, even though grain prices have gone up, right? Of course, you could sell, but that's just one group of people. Okay, they're required to report this if they're trading large positions of these commodities. Now, how can the government guarantee that this gets reported? Well, if you're a bona fide hedger, like you're in the futures market simply to hedge, not because you're trying to make money, you're not speculating. You're simply like locking in today's prices for the future. So the government says, look, if you're a bona fide hedger, we will give you advantageous tax treatment, aka lower taxes. But if you have profits and losses, for example, they treat it completely different. So like, for example, the government would know if you're a bona fide hedger and you made a lot of money in the futures market because you bought futures, you didn't make the money as revenue, you're offsetting losses somewhere else. Okay, great. Then there's another group of traders that also are buying and selling futures contracts, and they are buying large size futures contracts, but they're not bona fide hedgers. So why are they participating in the futures market? To make money. They're speculators, right? This is sort of like your hedge fund manager, buying Kansas City wheat and selling Chicago wheat, right? They're participating in the market as a speculator. And then when you add up all the number of contracts traded, because now the exchanges, they can see every single contract that was ever traded, right? It's different from Forex where there's no exchange. Well, there is an exchange. So they say, well, this many number of contracts were traded this week. This many were hedgers. This many were speculators, and then there's this unknown. These guys that didn't report their positions, but we know they traded. We could see the contracts. And those would be your retail traders, the small guys, aka dumb money. Okay? So that's what all this stuff is. So we're looking at number of contracts long, number of contracts short, and then the net is this dark line. Okay, so the market was significantly more bullish than before, and now is much, much more neutral. That's all that's telling us. Okay. Here's the light blue line. This is the number of people short, the number of contracts people have purchased to short the Aussie dollar. So the number of short positions is quite high. The number of long positions is significantly lower, right? But notice the drop. You see the huge drop? That's a drop in long bullish contracts. Oh, my pleasure, sexy crabber. Okay, Baystar asks a question, what are the advantages and disadvantages of trading currencies via futures and spot? Okay, cool. If you'd like to earn interest on your positions, you need to trade the foreign exchange market, the cash spot market. Futures contracts don't pay interest. The second thing is you'll have higher leverage in the Forex market. So in the United States, it's 50 to 1. I think the futures market, it's 40 to 1. So what is that? 25% higher leverage in the cash market versus the futures market. So on and so forth. But those are two good ones right there. And then I think if you're located in the United States, if you talk to your tax attorney, you'll find other tax reasons why the cash market's better than the futures market. Okay, so those are three real-world advantages of spot. Look at CAD here. Actually, you know what? I want to skip CAD. Let's do Kiwi. Okay, same thing as Aussie. Notice lots of bears. And then look at the drop in bulls. Uh-oh, Spaghetti-O. Could be interesting, right? Pound. Okay, the blue line, this is people selling. The gray line, this is people buying, right? Slightly more bearish than bullish. Oh, the other thing you should look at is this zero line. Okay, so the market is technically bearish. Well, John, I was comparing to the United States because we're talking about U.S. futures markets, right? So I wouldn't compare U.S. futures market to, European trading accounts, right? So anyways, so that's that. That's how you use that tool. I think it's very interesting. We're losing a lot of traders out of some of these markets. Because I know it's true. I know that I know that I do. Boo, 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 boo. Yeah. Call it magic, call it truth. All right, let's go in here. Aussie. Came down a bit, not quite enough. It came down a bit. Gray area here that I drew when you zoomed in is this area here. Okay, so the question last week, do you buy this dip when it falls? So based on, oops, wrong one. About 80 pips, this decline. The hard question is to know whether you want to buy it or not, right? And if that's enough. I actually wanted it to fall significantly more than that. So I'm not overly excited about that opportunity. You didn't like the strobe light, Sexy Crabber? Okay, so that came down as we planned, but not as much as I wanted. But maybe later today. If it falls a little further, that Aussie yen, then today, if it fell another 50 to 100 pips, I might buy it. Okay, are you going to treat this like a double bottom, or are you going to sell it like it's going to break? Okay, sure, easier if you have a trade plan. Okay, you can see you could have bought this on Friday if that was your plan. If you're a bear, this is your sell zone in here. You got the roll reversal, you got some pivots, and you get the moving averages. Okay, so if you're a bear, you're thinking this. And if you're a bull, you bought it last week anyways. And remember drawing this little triangle about a week in advance? Do you guys remember that? That if we got down to this green zone, it was buyable as a double bottom. Okay, we talked about that a week in advance, and now you're a day late. But it did happen. Oh, Mayor, I don't know anything about that. Euro dollar still moving up. I just want to look at what we have in front of us. Can you see if we break to the upside this week, it's significant? Well, 2 weeks ago, not last week, but the week before, this is our trade plan, remember? Buy the double bottom off the monthly central and target up here around 119. This is all part of our trade plan from 2 weeks ago. So here we are at 117.5. We have 150 pips left, but we were talking about it down here at 115.50, 116. So we're about 200 pips, 150 to 200 pips into the move. There's 150 pips left, but I want to reemphasize that this is part of a trade plan that we had. And we had this trade plan when we're coming up to here. This circle is where we decided it would retrace and create a new up opportunity. Just saying. It was all planned out. So that would be nice if we could keep it above this orange line, right? So on Friday, the discussion here, let me go to a 15-minute chart. On Friday, the discussion was down to 117.23 and then up. Oops, let me do this again. Okay, that's what we did on Friday. What I couldn't give, like advice-wise, it's really subjective to your style and personality. The real question wasn't that it was going to retrace and then go long. The challenging thing on Friday was whether you should short it or not. And that's where it's like, I can't make that decision for you. But it was clear to me that this 117.23 area was the place to buy. So you could sit out and do nothing and wait, or you could sell and wait. Another thing that it's not on this currency pair, but on other currency pairs, we hit our monthly targets. That adds another significant level of risk because a lot of the trends that we've enjoyed for the last 3 weeks technically have hit their targets. So technically, these trends do not need to continue for the time being. This could be a bad week. Okay? By a bad week, like a bull bought it here and earlier, and it went up just like it was supposed to. Then it comes down, so you're going to buy it again, right? This, like if you look left, this is just sort of a role reversal type play, right? The problem is much more this week than last week or the week before. We face this risk of it doesn't make a higher high. Okay? That's the issue at play. And it's not the euro dollar particularly, but many other currencies. And maybe they were just yen currencies, but I spent probably 45 minutes on Friday talking about being careful about this potential for change of trend. Not that the trend is over, but it doesn't have to continue this week. And maybe this week is really setting up October trades, which means maybe this is a dull week or a down week, and then we buy it for the rest of October, right? And you wait for your opportunities. So it's not wrong to continue to be a bull here, but just be wary. If it falls further, you might want to take a break, right? So what you're trying to do is change your bias. Well, not really. You're trying to use technical analysis to measure the market and to manage your expectations thereof. Okay? Hopefully that makes sense. Okay, there's the beast. Let's just kill this and start fresh, huh? Okay, pound dollar. This is the place you buy it. Okay? That was it. After that ginormous move, I said it was risky, but it happened to be the right price. You had a cluster of the exact weekly pivot you want to buy, and it's also a monthly pivot. Okay? So that was a buy on Friday or early Monday morning. Okay? And you're like, well, that's great, Wayne. Well, we did talk about it on Friday. But here's the thing. What if you're not a bear? What if you're a bull? That's it right there, my friend. Okay? And the bulldozers have started already. I was smoking a cigar late last night, sitting outside in the dark on my back deck, and all of a sudden heard a wild animal killing some other animals. I could hear all the babies crying and stuff, and I'm like, oh my God, I'm not sure what the heck it was. So I cried, of course. It was a good cry, a good kind. So anyways, that's what you're looking at. Down, up, down. If you're a bear, that's perfect. If you're a bear. Luis Garcia already bought down in there. Yeah, and that's just a weekly swing. The only difference with this than in a typical week, like this isn't just buying a dip, right? This is a reversal. Because this low is lower than that low. Okay? That's the only problem. So this is riskier than just simply buying a dip in a trend. Okay? So if you're a bear now, you absolutely totally have full position to consider selling here. In fact, if you're a bear and you don't sell there, I'm not sure what you're doing. Your next plan as a bear would be to sell it up here. Okay? But we don't need to talk about that now because it ain't happening now. Violet and beautiful, like catching crabs. Gold, still not interested in gold one way or the other. It's not really going up, not really going down. Oil, hey, it's going up. Did you guys read in the newspapers over the weekend? Oh, it was this. Oh, it was that. Oh, it's Iran. Oh, it's the Russians. Oh, it's OPEC. Oh, it's Venezuela. Oh, blah, 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 blah. Nobody said, oh, it's just buying a dip and rallying it up to the next target. Right? So we have it this way. A big rally, big retracement, buy it at support, right? Big rally, big retracement, buy it at support, big rally. Okay, we're supposed to get it to, remember, 73 bucks. I don't think it's going to go beyond that. So that's that. And you can see 1, 2, 3 weeks ago, we have a target of $73. We're now at $72. We were at, well, I can't see that. Is that 66? So when we were at 66, we were talking about this going to 73. And now we're at 72. Right? Can I get some likes? I mean, come on. We're having weeks, and we're setting trades up in advance, and the trades are lasting on 3 week stretches. Johnny Boy's been selling Brent, huh? Cool. So that's the cool part of trading. John says he studied 10 years or something of hurricane data, and we had those hurricanes in South Carolina, and he's like, look, I looked at the data, and oil's going to fall. So he was a bear. I'm like, cool. I don't know anything about that. I haven't done that research. I never noticed that. But good. If it's true, you earned it, right? But I said to him, I'm still a bull. Because I don't know that research that you studied. That belongs to you. I know my research, and my research says up. And the cool thing is, he might have made money. I might have made money. This is just, right? That's the cool thing about trading. You can get 100 traders in a room and find out that everyone's doing something different, but everyone's making money. And I think that's really cool. Okay. Was that right? Yeah, you know, I thought about it again last night. I'm overdue to go back to visit South Africa again. How does January sound? Tom Hanks, the porn star or the Hollywood star? Oh, wait, don't answer that. All right, let's move over. Let's do yen. Yeah, John, I'm not disagreeing with you or saying you're wrong or saying I'm right. I'm just, you had your analysis and you traded it. I had my analysis, right? Great. And we both make money. That's nice. That's what I love about this industry. All right, going back to the yen pairs. Okay, this is in a buy zone. Buying off that 55 is pretty exhilarating. The only problem is the 55 is anticipating a double top. And it doesn't have to be a double top. It's predicting we're not going to make a higher high. So there's two things if you're a bear, there are two things. You want to sell here as a bear, or you want to sell this orange line as a bear. A bull would have already bought it down here on the swing. So that's just a basic swing trade. It's a vulnerable swing trade for a couple of reasons. One, it's not a retracement, that's a reversal. But second of all, this is one of those examples I was talking about earlier. We hit the target for the month. On the second day of September, you had an opportunity to buy it right in my little gray zone, which was our buy zone. If you bought it down here, our target was 149 and some change right here. I gotta move it around. Right here was the target. So we hit that and it stopped. Good, done. So the risk is now it's done. So for example, if it dropped down to 145.50 or 146, I would buy it. Well, we're at 148, so that's a 200 pip drop. Do you want to expose yourself to that risk? Well, that's your call. The swing trading group and I, late on Friday, we talked about this being a potential long opportunity. So really, you could have bought it on Friday or super early Monday. Remember, you're supposed to be at your charts when the market's open. For me, it's Sunday night. We were right on that 55. Or then, so plan B as a bull would be buy it down here at 140, 145 and a half. Okay. So it's already moving triple digits. CAD. Once again, nothing but a counter trend trade left on this one. This orange line was where you're supposed to take profit. It dropped 100 pips. I guess you should have taken profit. Now what? It's not a good buy zone. Not a good buy zone. Needs to fall further. I need to get it to this gray area before I can buy it. So maybe I'm not aggressive enough, but after hitting the target, I'm conservative. What can I tell you? Okay. Kiwi yen. Another example of it hasn't fallen enough. The market's technically bullish, but I want a deal. I want a better price. Okay, that's all. I think that's okay. So I want it to drop down here. That's quite a ways. Remember, there's an interest rate decision later this week on Wednesday evening, which is Thursday in Asia, for the Reserve Bank of New Zealand. So put that into your analysis. They're not expected to raise interest rates. Mayor says today Draghi's coming to strength the euro. Well, he doesn't want a strong euro. He wants a weak euro. He's trying to create inflation. Okay, John says, how do you get into a trade that you missed? Drop into a smaller time frame. Okay. You're going to get a second or third move, but that's where you use price action on like a 5-minute chart or something and try to get into the longer trade. Okay. But don't make a habit of it either. For example, these swing trades, you're supposed to catch them Sunday afternoon around 5 or 6 o'clock in the evening if you live in New York time zone, okay? Waking up the next day is just unacceptable. And you're like, well, I'm out of position. How do I get in now? Well, maybe you don't get in it now. Maybe the guy that, did his job is the one that gets the yellow Lambo, right? The early trader gets the yellow Lambo. So I don't know if that's the case, but I'm just saying, John, if you miss it, you catch the next move on a 5-minute chart or a 15-minute chart, but just drop into a smaller time frame. But if it's more than that, then you need to address that as well, is all I'm saying. I'm not saying it's you, but if that's the issue, then, right, double check everything, that's all. No, not really. I mean, it depends how far out of position you are. If you're 8 hours late, well, you didn't get the trade, you missed it. But, if it's going to trend, so for example, this is a double bottom. Okay, if it's going to trend, it's going to do something like this, right? That's why I use the smaller time frames. These waves, you can jump in, right? So if you wanted to trade the double bottom, but you missed it, now you got to trade the retracement, okay? And if you missed that, drop into a small time frame, catch the next one. Okay? There you go, South Africa. I'm doing my best to help you out. Trying to get that yard nice and firm. Come on, Czar. Cool. I think that's about it for today. I think it'll be all right trading today. I'm hoping to get some pullback so I can buy some things that are falling. As far as temperament, we had several moves in the last 3 weeks that have moved as much as 1,000 pips. So the last 3 weeks have been very, very, very good. Now, this particular week, I'm not terribly aggressive. We've hit a lot of targets, especially the yen pairs. So technically speaking, you should have taken profit and been out. Friday gave some counter trend trades, but I don't really like counter trend trades. But you can do them if that's what you want to do. I'm too old and too pretty for such things. But I might spend this whole week setting up trades for the future. Okay? Sunday nights are the best part of trading, the trading week for me. Absolutely. Okay? So anyways, my sort of mental attitude is that I might spend the entire week simply setting up trades and being content with the trades already made. Yes, it's my job to make as many pips as possible, but I also have to recognize if I hit 5 or 6 targets already, monthly targets, I have additional risk that I'm now facing because the trend may stall out because of the targets being hit. So that's another level of risk. So if I trade, it should be smaller time frame stuff. And really, hopefully, I'm setting things up for October. So I'm trying to do that now. I'm trying to be patient, even though, you want to be aggressive after making, good pips 2-3 weeks in a row. Suddenly you want to keep going, but I'm recognizing that there's some risk in that market that I need to address, and I should be smart and I should be patient. Cool. Peace on earth. May the pips be with you. May your profits be above average. Cheers.